Hi everybody, welcome back to another weekly market review for F45trading.com. We are talking about April 1st to Friday, April 5th. New month, new week, and same old story. We've got a quick look at the news for the week. We've got obviously NFP coming up on Friday of this week, so just a heads up, guys. Careful on today, on Friday. Get the majority of your trading done before the Wednesday of the week, as the rest of the days typically, Thursday typically leads to consolidation and pretty slow moving markets, and then Friday it's obviously can lead to some whipsaw price action, so just be mindful of that moving forward. But we've got Monday, we've got some medium impact pound sterling news, we've got some euro news, we've got lots of core retail news, ISM manufacturing PMI news, so pretty heavy hitting news event right out of the gate to start the Monday off. We've got Governor Powell speaking for the Canadian dollar and some Australian dollar news. Excuse me. High impact news events late in the day Monday. So make sure you're aware of this trading Monday, especially early New York open for about the first hour and a half of trading starting at 8:30 a.m. New York. This could spike the prices in the U.S. dollar-related pairs. Going into Tuesday, quiets down a little bit on Tuesday. We have core durable goods and, again, late in the day, Australian dollar news. And then, sorry, I missed this one here, Australian dollar annual budget release. If you are trading the Aussie, just be careful on this one here. This might throw a bit of a loop in things. We do have building approvals and RBA rate statements, obviously. So, again, just Monday and early morning Tuesday trading. The Australian dollar, I'm actually hoping the Australian dollar is going to break out of the funk that it's been in. It's been in a real tight consolidation range. I'll talk about that real briefly going forward there, but just keep that in mind. This, I'm hoping, is going to start breaking that out of there. And then we've got Wednesday, all medium impact news events, ADP non-farm employment change, ISM non-manufacturing, medium impact. And then, again, going into Thursday, we've got monetary policy meeting accounts for the euro and some Canadian dollar news. And then, again, like I say, the show starts on Friday. So all in all, it shapes up to be a fairly volatile week. There should be some pretty good price cash injections into the market, whatever that means. And ultimately, I believe we're going to see some pretty good movements early on in the week. Like I say, coming into Thursday, end of Wednesday and into Thursday, we're probably going to see prices sort of consolidate and chop sideways just because of that, just because of typically what happens before non-farm. So I'd imagine all of the price movements are going to be coming out of the gate early on in the week anyway, all the favorable ones that you want to be taking part of. So let's just zip over to the US dollar real quick. Actually, before I do that, I always forget to do this. So just keep in mind this stuff right here, I was saying on Monday, all the Australian dollar approvals and then annual budget release. So this was just sort of my thoughts on the Australian dollar. I'll just zip over to it real quick here. You can see this is what I mean by the consolidation. This pair has really been in a very tight consolidation for the past little while. It's 300 pips from low to high. But really the last 2 months, since the start of February, price has been in about 120 pip range, either way, up or down. So that's what I mean by tight consolidations. But if you look at what's happening here, price is really moving up for something. If we go out to the weekly, we can see we had a nice big drop on this market, and then price just sort of stopped and stagnated pretty much the end of September of last year, and then price, we had one sort of failure swing up here to go nowhere, and price has just been rebounding sideways ever since, with this one quick stop run down here that swept under the lows there, and so far, like I say, it's just sort of really slowing momentum down as well too. You see these big ranges here and big range here, and then the last while it's just been the last 1, 2, 3, 4, 5, 6, 7, 8 weeks, like I said, 2 months. It's been very, very small, tight ranges. So I'm hoping that these rate statements and everything that are happening tomorrow could start to lead to get this thing to break out of its direction. Now, again, I'll talk about this here in a second, but my bias for this would be, obviously, if the U.S. dollar goes down from here just due to the seasonal tendencies of where it should be running. What it should be doing, it should be pushing the Australian dollar higher. And as of late, as of the past couple of weeks, the U.S. dollar has been climbing, and this really hasn't been going anywhere. So kind of leads me to believe that this potentially, this area under here, under this line, could be acting as support. We saw price come down once, twice. Forget about this big wick down here, and 3 times. I think there's a very good chance it could start moving off of this level here, and we could start seeing it hopefully reaching new highs. So I'm going to be watching for that going into next week. But in particular, right, you see this just this past, especially 2-week period, where we've had really, really, really tight ranges. I think they're sort of waiting for this week for them to finally break out of that range. I'll be bullish on this thing. If we can start trading higher than this range in here, then I think there's a very good chance that we're going to start trading out of this, and we could potentially start seeing you know, these old highs up in here get run out, and then we're talking. Then we're actually looking at some pretty decent price ranges. You know, 190, 200 pips just to clear this high from current location. So we'll see. I want to see what happens when price, if we do get lower prices on the U.S. dollar, if we can get above these highs in here. Then we could start looking at getting into some positions and potentially looking at some long positions going higher, if that's what's on tap for the U.S. dollar. So let's just talk about that now. So U.S. dollar, as you can see, right, nice big price push higher. We have, you know, sort of a retail trend line support that was just sort of traded back down to about 2 weeks ago. Failed to go lower than here, and since we've been running higher. Now, if we zoom in a little bit, we can see a couple of gaps in price. There's a big gap right here and another big gap right here. We knew this gap, this first initial gap, was going to get filled. We saw price push up, and that's what I had called early on, if you recall, last weekly recording. I mentioned, yeah, price is going to push up into there, and that's exactly what we saw. I actually was looking at the 96.30 level to see what sort of reaction we're going to get at it, and we can see we just powered right through that. So that didn't offer any resistance at all, but I wanted to see what the what the strength of this was to get through this block of price in here, to see if we had any strength to do that, and then potentially trade up into here. We've done that. So that was this 96.75 level. That was sort of the next level I was looking at. If we got run up into there, then there's a very good chance we could fill this range up in here. So now that we're up in here, I'm going to adjust this, and I'm going to say very likely that the 97... Sorry, I said 97.75. It's 96.75 down there. Very, very real possibility that the 97.10 level could get traded up to. And if that's the case, I think it's going to be difficult, to say the least. I think it's going to be very difficult for the U.S. dollar to trade higher than that. And only mainly because of what they're doing economically. The Fed has not been raising the interest rates, so there's nothing there to support the dollar move higher. There's, seasonally speaking, again, there's nothing there because it's actually technically bearish part of the season, and we should see price declining. So what I'm looking at, you see this run up in here, this pattern where we've been running up, making a higher high, higher high, higher high. We took all the stops above this level in here and rejected immediately. We ran all the way back down, ran this low here, failed to get under this low. I think this is just a very brief retracement back up. We're going to retrade off of the 97.10 level, and I think we're going to see price fall over, and that's where I think we're going to lose this low, and this low, and possibly rebalance all the way back down to here, to the 90, call it 94. I'm going to put this 94 level on here for now. And when we get down to it, we can obviously adjust it to see what the information is telling us then. But that's quite a drop on the U.S. dollar, especially from current range. When you can see this tight consolidation that we've been in, that's going to be a big range down. So that's what I'm looking at moving forward. And I believe the start of the week we're going to open up. So at the time of this recording, market is about 2 hours away from opening up. And what I think we're going to probably see happen is we're going to see a continuation to the upside. We may see price come down a little bit, and I'm just going to zoom in here. I'm just going to put this on here real quick, and then I'll zoom in and just kind of give you my ideas here for what the week is going to pan out but I think there's a good chance we'll probably hit the highs of the week. One or two things is going to happen. We're either going to hit the highs of the week early in the week, and you'll be able to tell what the weekly structure is going to be lining up right away. So if we come out of the gate, Sunday's open, Monday open, and we start screaming higher, expect 97.10 to get hit. I'm not looking for a price to go much higher than 97.10. That's pretty much my line in the sand. I'd give it maybe 96.20, the top of this candle right here, and I'd be out. If price goes higher than that, 97.20, then we're going to make a run for this high here, and then all seasonal bets will be off, and we'll be up and trading into these ranges here. And then, like I say, and then we'll be talking, okay, 98.35 as a potential target going forward. But we'll know that right away. Out of the gate here on Monday, if price starts chugging up this way, I'm going to be looking for this level to gain some resistance to the upside and start to see price roll over. Or the opposite, we could see and see price come down and trade back down to the high of 96.47. 96.47 to 96.50, somewhere in there. That's not the right price tag. One second. Just want to make sure I get the right one here. So 96, the high of this candle was 96.40. Maybe I got the wrong candle. High of this candle, 96.47. So I'd be looking for price to trade somewhere down to here, we'll call it. So what I'm putting this on the chart for is if we start running down to start the week off, what I think could happen is price is going to run back down, rebalance this level down here at 96.45, and then towards the end of the week and into non-farm payroll, I would imagine this area in here will probably offer some sort of support. We'll probably see price bounce up pre-NFP on Friday and then potentially come down. So ultimately, I think down is the trajectory. I think down is where we're going to go. But whether Monday and Tuesday open up bullish or bearish, again, will sort of set the tone for the rest of the week. But one of two things is going to happen. I definitely think 97.10 is going to get traded to this week at some point in time. So I'm just waiting to see if it's going to happen early in the week or later in the week, and then we can place our bets on the corresponding cross pairs from there. Okay, so hopefully that makes sense to you there. On the euro front, we've got price doing the same, very similar things as to what the US dollar is doing. I said actually in my one of my live sessions with my members last week that there's a very good chance, as you can see, price has been really running down here and making a hasty retreat on euro up until the past, I'd say, 3 or 4 days. It's kind of been not stagnant for sure. We have been making down candles, but not very large ranges necessarily. Like these daily ranges, are coming in at about 40 pips. You see that from the top of this candle here down to the low of that candle, 40 pips. The next day, this day here was 50, just about 60 pips. This candle here, 40 pips, right? So it just small candles, 40, 45 pips. This one from Friday was, 35 pips. So very, very, very small daily ranges. And what I had attributed that to is that between the Euro USD and the pound dollar, I felt like the trade was going to be in the pound dollar. So we saw them manipulate this all the way up, ran the stops, and then ran it all the way back down. So this is doing almost the exact opposite of what the US dollar is doing. You see that ran the stops here, ran underneath that previous low, did the same thing, the exact opposite on the euro, ran the old high here, ran the old high, and then rejected. So going forward, like I say, I don't want to see these lows get run out here. I'd like to see this being, the 112.14 level that I've got on the charts right here, 112.15 or whatever. I want to see those hold up, and I do not want to see them get traded back down to, and really see any more weakness on this pair. If this U.S. dollar is going to start weakening here, then I want to see this start to strengthen and this be the low in here. Yes, we could push down one more time, and the absolute lowest that I'd like to see it go, I don't want to see it come any lower than this low here. certainly could come down and create a double bottom. If we do see that little pop-up in the US dollar going into early in the week up to that 97.10 level that I mentioned, we could come down and bounce off of this and then run higher. But I really don't want to see this thing starting to make new lows underneath here, because then that would, we can obviously trade that, and I've got levels on the chart already earmarked for where I think we could be going. 110 or 110 big figure, I think we could be trading back down to if we lose that low. But like I say, seasonally speaking, we're not there. We should be bullish on this until the end of April. So I want to see another big push up into here for the next couple of months. So not quite there yet. And again, same story as, I'm just going to drop down to an hourly, same story as the US dollar. If we do come down a little bit, like I say, that's sort of my line in the sand right down there, that equal low that was way back there on the daily chart that I put in. Don't want to see it trade down there, but if it does, I would look for something like this to happen, and start to see price rally from there if we do trade underneath this low here. I'm hoping that's kind of the low, and that's what we'll see. Like I say down here, price just have one more quick stab down and then reject, run higher, and away we go. So that's what I'm looking at on the euro. And how deep we go, I don't know. I've got a couple levels. I've got 1, 2, 3 levels on here where we could potentially see price reverse down to, and we'll just have to sort of wait and see how the week shapes up. But I'd like to see Sunday's candle open, and then Monday drop down, and then hit the low Monday, Tuesday, and then reject, and then start to run higher Wednesday, Thursday, and then non-farm push it way back up into here on Friday. My target on this week is way up in here at 133.40, and if we could get a long somewhere off in here, that would be a great trade for an NFP week on Euro USD if we see bullish activity. So just keep in mind, again, guys, NFP's coming out. Watch your trades. If you are getting in the markets, do it early in the week. Moving on to the cable. As I mentioned before, Euro was in consolidation, and the cable was really moving. Now look at the cable. So remember those 40, 50, 60 pip daily ranges on the Euro USD? Well, the pound dollar was like, look at this one day, 220 pips. Look at this day here from last Thursday, 177 pips. This Friday candle, 150 pips. And look at this big up candle here, 320 pips. So we're definitely seeing some massive ranges in the pound dollar, larger than normal for sure, much larger than normally found. You usually get about 120 pip range on the pound dollar, but as you can see, just smashing those ranges lately. But they have been running this thing lower. They popped up, took out the old high here, and since I guess it would have been early March 13th, middle of March, they've been slowly, and not really slowly, but they've been coming down about 400 pips lower. I think there's a real good possibility that they're going to sweep under this low here, and I've had this level on my chart for quite a while. I actually wanted to see them come up in here, run those highs, come all the way back down, and this candle right here, I wanted to see them dip down one more time, reject, and then pop higher. Didn't quite happen the way I wanted to. Just failed to get lower into the buy area that I wanted. But nonetheless, the result that ensued had obviously come to fruition very, very nicely. And since then, we've seen very weak price. Keep in mind with the pound dollar, there's a lot of Brexit votes going on. They'll pop up, and like there was supposed to be one last week that they postponed until April. So a lot of instability with the pound dollar, or cable, as you will. So be careful on this one. If we go down and we start losing that low underneath here, then all bets are off. I am bullish on this pair, and you kind of look at something like this. I think they're going to run down and they're going to sweep this line under here, and I think we're going to see support somewhere in the neighborhood of right around here. I'll just give you an exact level on that one. I think we're probably very good chance at seeing support around the 128.80 level. That's where I'm going to be looking for if they have a big deep stop run come down. So I want to see them much like what the US dollar is doing, but in reverse. US dollar pop up to 97.10. I want to see pound dollar drop down to 128.80, reject, and then run higher. So basically this. That's what I would like. This is where I would like to see them finish off the week, up back in above here. And I think that's very doable. Obviously, you know, if we're getting a couple hundred pip trading ranges on cable every single trading day, that would be a fairly easy measure to grasp. But like I say, my line in the sand is down here. I don't want to see price go any lower than this. If it comes to trade into here, I'm going to have to reassess, obviously, because I am bullish on this pair, and we'll see where price goes. But I think we could be going higher on this guy. US CAD, we had a fairly big sell-off on Friday. Now, US CAD, it's, again, not great. Usually this is very correlated with what the US dollar is doing. US dollar goes up, US CAD goes up. US dollar goes down, US CAD goes down. But as you can see, as of late, we were sort of getting some mixed signals on this one here. We're coming down a big sell-off on Friday on the US CAD. I think we're probably going to see an area of support in here, and we could see another pop higher and then try to run this high up in here. I have 135.65 on the chart, and I've had it on there for a while, and it's about 225 pips away. I think there's a real good chance they could want to try to get up there. You know, I don't know at this point right now if the US dollar wants to just roll over from here. It's going to make it tough for the US CAD to get higher. But as you can see, the US CAD has sort of been doing whatever it wants to do, independent of what the US dollar is doing. So anything's possible. So I am looking for them to run it higher, run above this high here. But this could be the failure swing. We saw price swing up here, run all these stops, and we saw the momentum swing back and try to hit it one more time. That could be a failure swing. And basically what's going to happen is if this red line here, 133, you could call it 13300, I guess, just to make things easy. If this red line gets traded underneath, then real good chance that the US CAD will continue bearish in the seasonal direction that it should be going in. If we get a bounce anywhere in this green box area or this red line holds up, then look out 135.65, because US CAD is coming right up there, I think. So that's my analysis on US CAD. US yen, I'm not going to talk about anything on here. It's US yen's been it hit a number of price points that I was looking at, and right now, until the US dollar decides to do what it's going to do, I'm not going to give any type of suggestion on this, other than I think it could be difficult for price to trade back through here, through this level in here, this block of price in here. I think it could be difficult for them to do that. But if they start pushing higher and trying to take out this high here, again, all bets are off. So that's why I'm going to elect to wait to see what the US dollar is going to do before I talk about this guy. And then finally, crude oil. I'm just going to clean up this chart here for you a bit. A lot of stuff going on in crude oil right now. You know, OPEC's coming in and trying to cut production to get price up. Trump is coming in saying, no, price needs to go back down. There's independent analysts saying price is going to range anywhere from, you know, $60 to $65 to $70 a barrel for the rest of 2019. You know, it's anybody's guess. Crude oil is a definite geopolitical future market that is heavily weighted to what the policies of countries are doing, and it's so far past supply and demand. It's ridiculous. I mean, they come in and they say, yes, inventory crude reports are this, that, and the other thing, but it's really not. So don't be fooled by those. But we have had nice bullish price action as of late, and I think that's going to continue. We had a big push up in here on Friday. I'll zoom in. I think ultimately there's a real good chance that we could be getting up to the 64, maybe 65 level on crude oil. That would be the long-term goal, and it could take a few months to get there. Crude is bullish for the next few months as well, too, going into the summer. So we'll see what they want to do, but you can see price has been pretty ugly in here last week. I didn't do a lot of trading on crude oil, but you can see every time they dropped it down, they rallied right back up just as quick. And they dropped it down, and then they rallied quick, and dropped it down and rallied quick. And they did that as well, too, in here. They came up, dropped it down, rallied up quick. Dropped it down, rallied up, and then one quick drop down to sweep beneath all these lows, and then they ram this price up to the next level where they've been consolidating again. Very, I wouldn't say difficult price action. Last week I was looking for this low to get run out, and you can see just came down and just barely got down there and didn't quite run the low and then rejected. So I'm hoping for next week we can get a long in here. I'd like to see price come down, rebalance right underneath those lows right here. See all these lows? I'm just going to put a little X right here. I want to see price come down to this level here, and then start to reverse somewhere in about this area right here. I'll put a price tag on it so it's a little bit easier to see. So right around the 59.30 level, I think would be a real good area for this thing to rebalance at, and then I'd be looking for higher prices moving forward. Now, bear in mind, they may not get there. They could, as you can see, they came in, popped above these old highs here. We may not get a run back down here at all. This could be the low that they set on at the end of the week there, and we could just see price continuing to move higher. So if that does happen, our members you guys will get signals going through the rest of the week on crude oil, and we'll let you know when a good spot to get in is. But since they repelled off of this low here, I wouldn't anticipate them coming back down. And if this level here, 59.30, like the very line in the sand would be, 59 basically. $59 a barrel gets traded back down to, then look out because they're going to run this low right here. So just keep that in mind, okay? So watch price when it comes down before you start getting long or doing anything like that, and see and wait and see if there's any willingness for price to pop down in here. Okay, that's about it. That's going to wrap up my analysis for the day. I hope this was insightful. Hope you got something out of this. If you did, if you want more information, if you want to jump into our members chat room and get real live on the fly market commentary, data, signals, and everything else, just go ahead and go to f45trading.com. Check us out. If this flew over your head and you aren't too sure what I'm talking about, go to f45trading.com, because we've got some great coaching packages there that if you're a brand new trader, we can help you to get your feet under you, get you understanding the markets a little bit better, and get you participating and trading and making money as soon as possible. So check us out at f45trading.com. We've got a lot of stuff there that can help you, a lot of great resources. So until next week, this is our free event, our free recorded version for the public. And again, all of our members will get all of the live events happening throughout the week, and all the member privileges that go with that. So until next week, I will come back with another recording next Sunday as usual. I hope you guys have a great week of trading, and take care, because again, remember, it is NFP on Friday. Have a great week, everyone.